As the iron ore wheel turns and the banks run down the other side of the mountain, Gary Glover from Novus Capital is walking us through the charts and trading opportunities on the ASX. Good morning, Gary. How are you?
Yeah, I'm excellent, Chris. How you going?
Well, we've got a big change for two of the main pillars of the Australian market, the banks and the iron ore stocks. But before we jump into those and the trading shares, which you can click on the chapters below to jump ahead, we'll walk through the charts and the indices, because you've got the NASDAQ at the start of your report, and it seems like it's still going higher. So what's the latest with the NASDAQ here?
Yeah, so the NASDAQ and the S&P 500 are both still showing, quite sort of strong strength. So there's probably not really sort of too much sort of new there. I mean, apart from sort of that NASDAQ sort of having that second trend line, which is showing sort of slight weakness there, if you can call this slight weakness. But it is sort of still hanging on here. So like I noticed last night there was a bit of a reversal, a bit of volume there. I think we've had 3 distribution days in the last maybe 2 weeks or something. So we're sort of getting a few warning signs there. Definitely got our bearish divergence there. So we just need to have need to be really cautious here, because we are super late stage here. Look, might hang on a bit longer here. I think actually last night was actually quite bearish to set up there, but I just don't think this market's going to give up straight away here. It's quite extraordinary actually. The underlying depth and breadth issues in the market are pretty, quite amazing. I think in the NASDAQ composite there, I think over 400 stocks are now below their 200-day moving average, and the number is growing like day by day. So as the index actually is going higher, the number of stocks below the 200-day has been increasing significantly. So there's actually like the breadth issues there. So it just means fewer and fewer stocks are doing the heavy lifting, which is typically what you sort of see at the end of markets. If you go back and look at all the tops and look at what happens at them, this is sort of this is exactly what happens. It's the few do the heavy lifting at the end there. So that's why you've got all the classic signs here, sort of topping sort of stuff. So you just got to be a bit careful here. But yeah, I mean, it's funny here. I sort of think this is a pretty vertical market. So normally vertical markets end pretty quickly here, but I just get the feeling here this might follow more the 60 years sort of setup here, and maybe do a little period of distribution first. I think it might there's enough going on in decision here that maybe we'll get a period of distribution maybe for a couple of months before we get sort of something more aggressive on the downside next year. But I definitely think we're going to see a bit of a topping process here for the next month or two.
Well, the topping process has had an interesting setup. If you look at the S&P, we've been talking about the 60-point gains per week. That was almost a joke coming into it, but that seems to have halted at a confluence of cycles. So if it's not 60 points per week, what's next?
Yeah, so at some stage it's just, it's this trend will sort of will lose its momentum here. It's just look at this is a scary thing. It's actually quite a vertical based sort of market there. So each leg's gotten faster and faster on the climb here. So so normally you go back in history and see vertical markets here. Once they sort of end, it's pretty abrupt. So, but again, I just think this, this sort of some of the cycles are suggesting here that maybe we'll see some distribution first. So I don't know. It's strange here. We're sort of technically sort of vertical markets don't usually have distribution. They normally just sort of come off pretty quickly. But yeah, a lot of the cycles I'm looking at are suggesting we'll get a little bit of distribution first. But yeah, I mean, we've got all the divergence here. We've got underlying weakness there. Late stage here. So yeah, I mean, we're on massive vals. So just might, still a bit of money in the system here. So maybe it's going to take a little while to distribute. But yeah, I definitely think there's some risks here. But just got to watch sort of some turns here. I think if we see some decent reversals there and we see some distribution days as well, then got to be cautious here. But it's so we're very, very late here. So I mean, possibly the safest place is that in terms of the US, there would be taking some money off here or grinding stops here. But I just think the US market is got great risk here for some reasonable downside here. So I'll just be super cautious there with that one.
Well, moving from the S&P just over to the Dow Jones, we've seen the upward progress. It's slowed and it's struggling to gain ground once again. And is that sort of the behaviour of the broadening top that you would see?
Yeah, so unlike the S&P and the NASDAQ, the Dow Jones actually is showing some real weakness. So it has been a lot weaker than the other indices. We've got this overlapping sort of top here. So we've got this sort of, strong trends, as we sort of highlighted in the past. A strong trend will sort of sit on top and build. And then once it starts accelerating, it'll leave spacing there. So basically the pullback will sit above the previous high. But in this case here, we can see each high, when it pulls back, it's pull back below the previous high, pulls back into the range, and then sort of overlaps. So this sort of overlapping nature, that's actually not a sign of strength. That's a sign of weakness. So this sort of often referred to as broadening top, or this sort of overlapping top there. But that's generally a sign of weakness there, particularly after you've had a pretty strong run. So we've seen quite a few of these recently. We showed one on CBA there in the last week or two here. And a few of these other, I think BHP's done a few overlapping tops as well, if you look at some of those charts as well. So yeah, this is a pretty negative sign here. So the Dow is definitely looking a lot weaker than the other indices there. So look, maybe it hangs on here, but yeah, this is definitely a bearish sort of setup here.
Well, we look at the bearish setup from the Dow Jones and then move over to the Australian market. The XJO ASX200 hasn't retested the highs like the US markets, whether it's Dow Jones, NASDAQ or S&P. It's just struggled to get back up there. So what's happening here in the Aussie?
Yeah, similar to the Dow, just showing sort of real weakness there. Sort of, the last couple of weeks, we've seen really tightening go on. So the ranges are getting narrower. So we've still got our sort of right shoulder here. We're definitely seeing, like within the sort of ranges there. We've seen obviously, like the resource stocks have had a pretty decent pullback here with iron ore, and then the banks, which were running hot here, they've sort of started to turn. So for me, you can sort of see that the banks here have started to sort of, now we've seen, Suncorp, Bendigo, Westpac, now Combank. So I think, looks like all those banks are sort of turning lower here. And then, the BHPs and Rio's Fortescues, they're starting to sort of bounce off the lows here after having a pretty deep pullback there. So might just make this a little messy here. But I still think this is going to be a little bit of a bearish, and our index is not looking nearly as strong here, but maybe it'll be a bit more of a kind of a corrective decline. So I don't sort of see this being having like an impulsive move here. I think it might just sort of be a messy sort of right shoulder here and just sort of work its way lower here.
Right. So continue across that sideways to lower churn.
Yeah, it might have a real messy look about it, but I think it's definitely showing signs of weakness there anyway.
Well, if we move from the indices into some of those companies that you've just mentioned is rotating through, you'd said BHP sort of had the overlapping top. Is that what you've got highlighted on the chart here?
Yeah, so we got a few of them there actually. So we had a few of those sort of, we sort of had a run and then overlapping top, and then it's when you get a correction there. So occasionally you might get a fourth peak, which is a bit rare. It's like getting a fourth ascending trend line, which is even rarer, but they do happen sometimes, So, but yeah, the three peaks there, I've had a few of those in the past, so for BHP, which have been pretty good. But on the chart here, I'm just actually sort of finding at the moment, we're getting, the market, when the market's sort of trending up, it's really sort of, trending hard. So we saw, obviously we've seen iron ore trend hard, and coal stocks trend hard, and lithium stocks sort of trend hard. But when they fall, they've been falling pretty hard as well. And they've been coming pretty back deep in the range there. So I think so. Two tools you should be looking at this market is looking at your fibs on your weekly charts. So looking at your 50% retracements, or maybe your 61.8. So looking at those sort of key Fibonacci levels there, and then looking for the price to sort of confirm as well. You want to see price starting to sort of diverge or starting to sort of base off those sort of deeper lows. So we start to sort of build off that, then you've got sort of something where you can have a move here. So I still think this is only your first leg down. We'll get some sort of B wave in between. Hopefully the B waves, oftentimes when they're off hard like this, a B wave can bounce back pretty sharp as well. So so far BHP, Rio, and Fortescue are all looking like they're sort of bouncing off sort of key technical zones, and they're all showing a bit of strength as well here, and doing a bit of building there. But I just got to be cautious not to be too bullish here. Just what we want to sort of see here is a nice sort of quick rebound here. So so far it looks pretty constructive.
Well, constructive movements on BHP. Next, we move into still staying in the iron ore space. We move to Rio Tinto. Now, that can be more volatile than BHP at times.
Yeah.
It still seems to be going down. Is it sort of shortening of thrust and sort of
Yeah, just nice to see the few of them sort of diverging there and holding up there. So the last thing on the chart here, because I was sort of looking at sort of some ranges, some levels here on Rio, it's sort of come back to a bit of a key low historically as well. So I think just slightly marginally lower than the previous sort of big low on the weekly chart. But when we sort of drill into our dailies there, because this is sort of trending down, it should sort of go to, any sort of, you generally sort of go to, if you have a sort of counter move, you'll generally go to a new low in the same amount of time or less. It's like if you're sort of trending, just say you're trending up and you say you pull back 3 or 4 days, then within 3 or 4 days, you should go to a new high. That's a sign of a strong trend here. So in this case here, we can see that sort of Rio bounced up sort of 2 days off that last low. Pretty impulsive sort of bounce there, pretty quick. And then we've drifted back twice as much time, so like 4 days. And the volume probably was a bit lighter in there, and it sort of held on. And then we saw on Friday, actually, the market sort of turned up. And it turned up in pretty strong volume there. So I thought, okay, well, starting to see some of the other iron ore names look firm here. It's just showing us the first sign of a counter move here. And the thing I loved about it too is, if I'm sort of buying it down near that low with just under the stop there, I think I had like a 2.5% sort of stop. So, it's a nice risk reward trade for me. I think, if it can bounce back here, it might even go to 104 or something there. So there's a good sort of 5-to-1 risk reward. And I'm only risking sort of 2.5% of my capital. So it's like, I like it. So so I think it looks pretty good. So we've got a decent move in some of those. I think the 40 skew, I've already moved my stop to break even. I'll probably, after today, I'll probably move it into a slightly profitable position. I'll probably move Rio and BHP up into break even there shortly. So they've all jumped pretty nicely. So it all looks pretty good. So I can probably just take my, put all my stops at break even here and kind of, just hopefully let the market sort of, take it higher and, lock in some decent gains there, hopefully.
Iron ore is definitely bouncing. On the other side, we're seeing the banking stocks that were holding up while iron ore was tanking. They sort of helped the Aussie market stabilise. Yeah. They're on the nose. So what happened to Westpac, and what on earth is that chart saying to you? Yeah,
so like sort of Fortescue's kind of led me, that sort of strength in Fortescue has sort of led me into other iron ore names and other miners as well. And the banks have sort of led me in the other direction. So we've seen here that like Bendigo, Suncorp, and Westpac there recently all started to trend down. And we highlighted CBA last week as a really bearish setup there. So we're just starting to see some of those other, that sector show some real weakness there. So if you look at like Westpac here, just looking at sort of, we can see we've got that, this is on our weekly chart there. We had those 3 ascending trend lines. So when we do get those 3 ascending trend lines, we typically come back to where the third one started, which in this case is around that sort of 19.50 sort of $20 mark there. So we're sort of looking, that's our sort of target there. But we also want to look at our fibs as well. So things, I know sort of banks historically there. So, like our market comes back to the 50% level, so too do these banks as well. I come back to the ranges and stuff there. So there's a couple of sort of fib levels in there to watch there. So I really like that. So I think it's 2030, I think is a 50% range sort of there. So I think that looks looks quite good there. So yeah. So yeah. So I think we'll just drift off to then, I think, yeah.
That's Westpac. It's definitely looking the weakest of the banks. National Australia Bank, NAB, seems to be defying gravity and holding its way up there. Is it possible that it can defy the odds and buck the trend of the other banks?
Yeah, I don't think so. I think it'll follow the banks here. I mean, the thing that has sort of helped NAB is NAB's got a massive buyback going on. So I think they're buying back like $1.5 billion of its stock here. So yeah, raise at 24, buy them back at 28. Real good capital management there. But putting that aside, it's just basically that is proper. That is sort of propped up a little bit here. But at the end of the day, if all the other banks start coming off and everyone's sort of questioning banks' sort of returns here, which going to be flat at best here. So all these multiples, they're pretty high there. So I think you'll sort of see them cool off here. So I think in NAB's case here, we'll probably come back to at least where that that last sort of drive started there, which is around 25. But don't be surprised if we come back a bit deeper ultimately once that sort of buyback's done, and once we get a break at that level, I think you might see these banks pull back here. So it's probably not the time to be looking at resources. I mean, it's super competitive. The banks got so much more competition now. I mean, Macquarie and AMP Bank are making headway. You've got all these neobanks and all these fintechs. So super competitive space there now. So much more competitive than it was maybe sort of 5-10 years ago. Yeah, we're valuing these banks on currently multiples beyond the last 10 or 15 years of and where there's actually so much less growth here. So I think I'll drift back here.
Well, we look at some other trading shares that you've highlighted this week. You've got Ansell ANN, and that chart, look, it's coming down. So how are you trading that one? What's signaling you to enter this one?
Yeah, so just come back quite deep here. Actually, it's probably it is the cheapest multiple the stock's come back onto for the last sort of 10 years as well. So normally it sort of trades in about 30.5, sort of 20 times. So currently we're back sort of down there, that sort of 12.5 times there. Just got a bit obviously frothy there, through COVID there. Obviously was hitting out of the park there, and then obviously it's obviously sort of cooled off here. People taking a bit of profit off it, and sort of realize it's not going to have the same returns sort of as we've seen last year. So I see a bit of profit take, but I think now we've sort of come back to a pretty decent level here. And so just come back to the old, I think it's like the old 2015, 2016 high there. So, those old historical highs in the weekly there can become, old highs can become sort of new support there. So just like the price action in the daily there, just sort of showing signs of sort of halting here. So, I like this one here. I've got a small position. I've just got a reasonably tight stop there, but I think this looks quite good, quality company. So, yeah.
That's one of the trading shares of the week. You've also brought up Select Harvest SHV. There's a lot of life in these rallies and troughs. So what are your indicators on this wild ride?
Just look at, this is just typifying the current marketplace, really. The environment is, we're sort of seeing some big moves here. So I think, we traded this one early in the year, sort of got in at a pretty good level and got out way too early. Just didn't see the massive move coming here that we saw here. But we've now pulled back, come back again. Looking at our fibs, we come back to the 61.8, come back to the old high as well. So no surprise to sort of see it bounce off that level there last week. So I think if you can sort of show some support around here, then it's probably a good level there. I mean, still the inflation trade's still on for mind here. So you've just seen, these stocks go up and down. So they're just swinging around pretty wildly. So for the smart traders here, these are, there's some opportunities here as well. For the investors who are sitting through these curves, I don't know, your portfolio must be going up and down in a pretty wild manner. So, but yeah, definitely, just to me, just sort of highlights, looking at your, start to look at your fibs and stuff there. Look at sort of your old highs, just sort of price levels there, and and then just look for price action to sort of support that as well. So don't jump in just because there's a fib there, but you want to see some price action start to hold around there. So so no, all good.
That's definitely a wild ride. Another one trading share this week is Sigma Health. It's still moving around a bit, but it seems to be building a base over the longer term on that chart that you've got there. So what are you seeing is how you're going to trade SIG?
Well, sort of obviously like Sigma was looking at API and it sort of at one stage overbid Wesfarmers. But then the API board has endorsed the Wesfarmers bid there. So it's just obviously showing that I think the sector potentially is in play here. So Sigma sort of missing out means obviously the share price has sort of come off a little bit here. But I think in the past they were sort of it's like the banks. So the banks sort of decided to go into funds management. One goes in there, they all tend to follow here. So I think in the past, obviously these the retailers tried to get into pharmaceuticals and pharmacy there 10 years ago. I think got knocked back at the time by regulators. But if Wesfarmers is going back into here, it's not going to surprise me to see Woolies going or even other retailers would probably try and make the same moves as well here. So just might sort of, just worth sort of watching this here. I just noticed technically that 52 cents is a big level there for Sigma, but I don't know, I think sort of API and Sigma, I think it's sort of, still pretty interesting there. I think those sort of stocks potentially are in play here. And so, yeah, I just think it's worth sort of watching that space here. I think, eventually here, maybe Sigma could be in play here. Look, let's get away for a bit more evidence here. But, yeah, I definitely think looks like a pretty important price zone around 52. But, yeah, the sectors, could be in play here. That's all, yeah.
Very well. That's a sector to watch, and we'll see if the thematic takes charge and starts running back up again, like you said, the banks had done in the space a decade ago for wealth management. So that rounds out the trading shares for this week. If anyone wants to get in contact with you, there's the number and the email on screen. And thank you for this week, Gary, and we'll come back again next week.
Thanks, Chris.